Good afternoon, guys. Joe Baker, Trade Pilot Pro. Want to go over the market action today and discuss a little bit of what I said in last night's video. Last night's video, I had the weekly pitchfork up showing a downward move. I know you all saw it. If you didn't, go back and look at it. So the first part of the video. And I said that we'd be looking for, continued lower lows on the weekly close. Now, if we go back to the daily, we can see this market action is extremely choppy. Every time the market looked like it wanted to go up, it came down. Every time it wanted to break out, so forth and so on. I mentioned that last night. No follow through whatsoever. And we've been kind of in this trading range, pretty much throughout the summer. Albeit we have made higher lows up until a few days back. And kind of wanted to draw these trend lines and show you what's going on here. And it's not a pretty picture. Okay, that it's not. It's definitely not pretty. It's not something that I would be very comfortable with being long this market, anything longer term. So, that being said, every time this market's looked like it wants to actually follow through and sell off, we've had this miraculous miracle rally that comes through and just makes it all better and throws fairy dust all over the market. So, I don't, again, I'm an intraday trader. I mentioned a long time ago, I took all our money out and, the markets and basically went cash, money markets and so forth, looking for some impetus that says that we've had this capitulatory bottom that I'm looking for, and we haven't had it. And I think this is what's frustrating the traders, the bulls and the bears. The bears aren't getting satisfied because we're not getting broken down. And the bulls aren't satisfied because we're not breaking out. So again, I also mentioned that it was going to continue to frustrate people. I do not expect this to continue, being that we're in September. Okay, a lot more volume will come back in this market, and this market will start to push. Okay, so just keep an eye out. All right, I'm going to give you a daily level about 62. Well, it says 62, 67. Let's say 62.50, 62 area. We do not want to take this area out. We do not want to close below this area. Okay, this would set off a little bit of a structure sell. And again, on the weekly, it's 34, I believe. I did it in last night's video. So right now on the daily, it's 62. On the weekly, it's 34. And again, if the structure works out, we are going to head much, much, much lower in this market if we do get some follow through. If not, again, we'll just continue to chop. We have no problem with it. We trade our levels every day. Our target was hit again today. It was hit again the day before. It's not a, we trade these intraday and we let the market tell us what we're going to do. We don't dictate to the market. We don't impress our opinion on the market or our belief systems. We do exactly what the market tells us to do based on price action. So, you can go ahead and you're all welcome again to join us in our chat room. Just send me an email. I'll send you a free passcode for 5 days. You're welcome to come in, check it out, check out how we do trade this intraday. And again, please sign up for your nightly newsletter so you can be getting these in your email and not have to wait for me to post them, or you have to listen to my little rant. So at any rate, again, 1262.50 area is my warning area. Here you are. We are in a downtrend, and we hit this upper level today, and boy, do we back off. Let's go over to the intraday levels for the S&P futures. And here we are. My line in the sand, 1278.50. Okay, it's 1278.50. Above that, 1281.50, 1285 and a quarter, 1288 and a quarter, target 1292 and a quarter. Remember this area. This is where the market really broke down and started to liquidate today once we took out that 1292.50 area, 1294. Okay, so that would be upper level resistance at this point, where that's really where the market really started to accelerate its downward, and we really started to liquidate these guys. Okay, remember, the market only moves because it has to, not because it wants to. It moves when losers are liquidating, either to the upside or the downside. Underneath the 1278.50, it's 1276.25, 1273, 1271 breakdown area, 1267.50, 1263, 1260.25. Okay, it would be the target. All right, now you know, okay, I've been calling for this 1275 area underneath 1283. And you know, these are all the same numbers that we've, I mean, I feel like I just wish I could get some more numbers in here because these are getting boring. What's happened is, and I mentioned this, these pivot areas are getting layered on top of each other. So now instead of being 1275, we have to go 1276.25 to 1273 because this level is layered, and we've been here so many times before that we have multiple layers of support and resistance all through this area. So the reason I'm mentioning this, okay, is you can get some chop in here, okay, because you have so many lines of defense that the market can chop in that area, okay. Underneath 1271, not a problem. We're going to have a little bit of an issue at the 69 area. Not much of an area, I don't believe. We traded it last week. I believe we stayed in there for a few hours throughout the day and bounced back and forth. Not a big deal. 67 area is much bigger, and then the 63 area is a lot bigger than that. Okay, so that being said, I just want to let you know that these areas are layered with levels of support and resistance because we've been hitting them so many times over the last few months. So just expect possibly a little bit of a rocky road through these areas as we get down to these targets, either to the upper or the lower. All right, guys, that is it. I will check back with you tomorrow night after tomorrow's trading action.